with over 170 orbital launches completed in 2025, an active account base that grew from 1 million to 8 million users in just 3 years, and a projected valuation between $1.5 trillion and $1.75 trillion. SpaceX may be on the verge of the most consequential IPO in stock market history. The internet created millionaires. Smartphones built billion-dollar empires. Artificial intelligence completely reshaped the stock market in just a few short years. But now, a new technological revolution is taking shape not on the ground, not on a screen, but directly above us in outer space. What separated the handful of visionary investors who took advantage of the internet and AI was the simple question they asked in the early 1990s and in 2015. How do I get in? The ones who found an answer and acted on it changed their financial lives forever. If your goal is to find out how to take advantage of this once-in-a-lifetime opportunity, then this is the video you do not want to miss. We're breaking down 3 ETFs that can give you direct leverage on this trillion-dollar generational wealth event. Make sure to watch until the end, because this video could change your portfolio forever. Welcome to Investments Mindset, where wealth builders come to get inspired. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Let's dive in. Firstly, it is important to note that what separates this moment from the typical market hype cycle is the undeniable reality of what SpaceX has already built. This is not an unproven startup chasing flashy headlines with no real business model. SpaceX has quietly become the backbone of the modern commercial space industry while still operating as a private company, and that fact alone should command every serious investor's attention. Most people still associate space exploration with science fiction, drifting astronauts, and distant colonies on Mars. Yet the commercial space economy has already become very real, very profitable, and potentially one of the most massive industries of the next several decades. SpaceX is leading that transformation, and it has been doing so with a level of operational dominance that competitors simply cannot match. Before SpaceX, the concept of reusable rockets sounded nearly impossible. Landing an orbital rocket safely back on Earth felt like something reserved for Hollywood. Yet SpaceX turned that dream into an everyday reality, and today, those rocket landings have become so routine that the world has almost forgotten how revolutionary they truly are. That breakthrough matters because reusable rockets dramatically reduce the cost of reaching space, and lowering costs is precisely what unlocks entirely new industries. In the same way affordable personal computers accelerated the internet revolution, cheaper access to space is now beginning to unlock a completely new global economy. SpaceX also became the first private company to successfully send astronauts into orbit, secured billions in contracts with the National Aeronautics and Space Administration, the Department of Defense, and intelligence agencies worldwide, and built a rapidly expanding satellite network that is quietly reshaping global communications infrastructure. The National Aeronautics and Space Administration missions alone reportedly contribute more than $1 billion annually, cementing SpaceX's status not as an ambitious experiment, but as essential infrastructure for governments, defense systems, and commercial clients operating on the world stage. From a purely financial perspective, the numbers are staggering. Reports and industry estimates suggest that SpaceX generated between $15 and $16 billion in revenue in 2025 alone. A massive portion of that growth came from Starlink, which has evolved far beyond a satellite project into a full-scale global internet infrastructure business operating from space itself. Millions of people now depend on Starlink internet access, particularly in rural and underserved areas where traditional providers failed for years. during disasters, emergencies, and military conflicts. Starlink proved it was not simply a convenience, but essential infrastructure. And unlike traditional aerospace companies that rely almost entirely on government contracts and occasional launches, SpaceX has built something far more powerful: recurring subscription revenue. Millions of customers pay monthly for Starlink services, creating a predictable, scalable cash flow that fundamentally changes how investors should think about this company's long-term financial profile. And then there is Starship. SpaceX has reportedly invested more than $15 billion into developing this fully reusable next-generation rocket system designed to drastically reduce the cost of transporting both cargo and people into space. If successful, Starship could reshape industries ranging from satellite deployment and military logistics to orbital manufacturing, deep space missions, and eventually Mars colonization. The goal was never simply Mars itself. It was always about building the infrastructure required for humanity to expand as a multi-planetary species. That vision sounds bold because it is bold, but history has repeatedly rewarded the companies willing to pursue the largest possible visions. Now let's dive into the first ETF, simply known as the TEMA Space Innovators ETF, ticker symbol NASA. Firstly, let's talk about timing, because in investing, timing is everything, and the TEMA Space Innovators ETF arrived at exactly the right moment. This unique ETF was formed on March 30, 2026, and is domiciled in the United States. NASA launched at the end of March, just after SpaceX announced its tie-up with xAI. This fund didn't arrive fashionably late to the space race. It arrived precisely when the countdown reached zero. The portfolio itself is built for the space economy in a comprehensive way. The TEMA Space Innovators ETF provides actively managed exposure to the emerging space economy through a portfolio of both publicly listed companies and a limited selection of high-conviction, pre-IPO companies covering space exploration, rockets and propulsion systems, and satellite technology, among other commercial opportunities. This unique fund holds 36 individual holdings. The top positions are a ST Spacemobile at 15.87%, Rocket Lab at 15.24%, Planet Labs PBC at 13.27%, EchoStar at 10.65%, and Firefly Aerospace at 10.48%. Rounding out the portfolio are names like Intuitive Machines, Blacksky Technology, MDA Space, York Space Systems, Avio, Filtronic, a truly global constellation spanning the US, Canada, the UK, Europe, and Japan. But here is where NASA becomes something genuinely extraordinary, something no other publicly available ETF can offer. Even though SpaceX is not publicly traded yet, NASA has already secured its position. As of May 15, 2026, NASA holds shares equivalent to a total value of $58,912,771. That stake is held through a special purpose vehicle, an SPV, giving everyday retail investors access to a pre-IPO position that would otherwise be impossible to obtain. The performance since launch has been outstanding. Since its inception, the fund is up 37%, well ahead of every competing space ETF over the same period. NASA has pulled in $367 million since March 31, and its market cap now stands at approximately $422 million. The expense ratio is 0.87%, a reasonable price for an actively managed fund in a complex, fast-moving sector where stock selection truly matters. NASA is available at every major brokerage: Fidelity, Schwab, E-Trade, Robinhood, and Interactive Brokers. Now, I know that the TEMA Space Innovators ETF sounds fantastic, but the next two ETFs provide something even more unique. That's because there is a phrase that every experienced investor knows: the pioneers take the arrows. But there is another phrase that matters just as much: the pioneers who survive become legends. The Procure Space ETF, ticker symbol UFO, is the pioneer that has survived. Before we continue, if you find value in this video, even just a little, Please subscribe and hit the like button to help us continue to provide more insightful and educational videos. Your support is highly appreciated. Thank you. SpaceX ETF is the world's first exchange-traded fund focused exclusively on the global space industry. The fund launched on April 11, 2019, a full 7 years ago. And in those 7 years, it has built a track record that newer funds are still trying to match. It is managed by Procurium with an expense ratio of 0.75%. The milestones tell the story. On April 16, 2026, UFO surpassed $500 million in assets under management. Over the past year alone, UFO has attracted $628 million in net fund flows. The money is moving into this fund for a reason, and that reason is performance. Let's look at what makes UFO structurally different from almost every other fund that claims to offer space exposure. UFO tracks the S-Network Space Index, and its methodology requires that every constituent company derive at least 50% of its revenues from space-related activities. That is a high bar, and it means every single company in this fund is genuinely, meaningfully in the space business. The portfolio reflects that discipline. UFO currently holds 54 companies, with sector allocations of 46.85% in industrials, 31.38% in communication services, and 21.77% in technology. The top holdings include Planet Labs, Viasat, Globalstar, SiriusXM, Rocket Lab, EchoStar, Iridium Communications, Trimble, and Garmin. U.S. companies account for approximately 72.9% of the index, with the balance spread across Japan, Canada, Luxembourg, and beyond. The space economy is not a purely American story, and UFO captures it all. Now let's talk performance, because the numbers are extraordinary. UFO returned 66.36% in 2025, while the S&P 500 only gained a fraction of that. And for the full 3-year run, check this out: 30.5%, 1% in 2024, 66.33% in 2025, and 41.16% in 2026 year to date. That is 3 consecutive years of powerful double-digit returns. Over the trailing 12 months, UFO is up 122%. And with the anticipated SpaceX IPO, analysts are expecting a more dramatic performance from UFO. UFO currently holds Rocket Lab, Planet Labs, Ast Spacemobile, EchoStar, and every major company operating in the same launch, broadband, and orbital infrastructure lanes as SpaceX. UFO also offers a modest dividend yield of approximately 0.79%, which, when reinvested through DRIP, compounds meaningfully over time. Now, there are 2 final frontiers left for humanity to conquer: outer space and the deep sea. And there is one ETF, backed by one of the most respected financial institutions on Earth, that gives investors a single, low-cost ticket to both. That fund is the State Street SPDR Kensho Final Frontiers ETF, ticker symbol ROKT. Let's start with who is behind it. ROKT is not a startup fund from a boutique issuer. It is the product of State Street Global Advisors, one of the largest asset managers on the planet, home to the iconic SPDR brand, and the creator of the original S&P 500 ETF. State Street brings institutional-grade infrastructure, rigorous index methodology, and decades of ETF management experience to the space investing category. When you buy ROKT, you are not betting on a new idea. You are buying into a proven institutional framework applied to an emerging sector. The fund was launched on October 22, 2018, making it the oldest space-focused ETF in the market, and it seeks to track the S&P Kensho Final Frontiers Index. Here is what makes that index special. It uses artificial intelligence and a quantitative weighting methodology to identify and weight companies whose products and services are driving innovation in the exploration of outer space and the deep sea. The portfolio currently holds 37 assets, with top holdings including Planet Labs PBC at 6.17%, Intuitive Machines at 4.48%, Iridium Communications at 4.21%, ESCO Technologies at 3.97%, Oceaneering International at 3.72%, Lockheed Martin at 3.69%, Northrop Grumman at 3.51%, Moog Inc. at 3.50%, L3 Harris Technologies at 3.45%, and Ducommun Inc. at 3.40%. Notice something about that list. It includes both pure-play space innovators like Planet Labs and Intuitive Machines, companies riding the commercial space wave, and blue-chip defense and aerospace primes like Lockheed Martin, Northrop Grumman, and L3 Harris. This dual mandate is deliberate and powerful. The innovative space names provide explosive upside potential. The defense primes provide balance, earning stability, and, critically, a dividend income stream that pure-play space funds simply cannot match. ROKT pays quarterly dividends and has made 30 historical dividend payments for investors who want space exposure with income. There is no other fund in the category that delivers it as consistently. Now, the performance record in the last 3 years has demonstrated steady growth. Check this out: 14.41% in 2023, 27.89% in 2024, and 50.54% in 2025. The average annual return since inception stands at 21.09%. The 3-year annualized total return is 39.6%. The 5-year annualized total return is 22.1%, and over the trailing 12 months, ROKT delivered a total return of 110.79%, including dividends. These are not speculative moonshot numbers. These are the compounding results of a disciplined, AI-driven index strategy across nearly 8 full years of market cycles. Through COVID, through rising rates, and through geopolitical disruption, ROKT has proven it can perform in all conditions. And then this is the number that every cost-conscious investor should write down. ROKT carries a total expense ratio of just 0.45%. That is the lowest of any major dedicated space ETF. It is nearly half the cost of UFO and roughly half the cost of the TEMA NASA ETF in over 10, 20, and 30 years of compounding. That fee advantage alone can represent tens of thousands of dollars in additional portfolio value. On the SpaceX front, ROKT is uniquely positioned for a post-IPO windfall. Listen, friends, SpaceX will be going public soon. When it does, it is expected to be the most consequential IPO in a generation. And the investors who position themselves will be the ones who look back and say, "Thank goodness I did." This is not a drill. The launch pad is live. The rocket is fueled. The only question is, do you plan to be on board? Now, if today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth the smart way. Please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Listen, if you want to know the 5 best Fidelity index funds to buy and hold for life, or the 5 best high-yield ETFs for monthly dividends with zero NAV erosion, check out the videos on your screen right now. Thank you, my friend.